Hi everyone, welcome to Market Talk. 2 weeks have passed. Greetings from Lithuania. Nice winter day, minus 20 Celsius, minus 5 Fahrenheit. So now let's keep ourselves warm and talk about the market. Yeah, so today was a very interesting day, and these 2 weeks also gave us a lot of news and a lot of action in the market. Again, most important assets, of course, remain the same. So we have precious metals. Dollar is falling down. Equities struggle to make new highs. So yeah, let's start. I'm sure we have a lot to talk about. So Ted, what are you thinking about the market?
Hey guys, good to see you both. And what am I thinking about the market? I'm thinking there's a lot of parabolas that we need to talk about. A lot of moves that are basically price up, vol up, and I think it's presents some interesting opportunities for those that are adept and want to trade around some core positions. Why don't I start by sharing my screen? I absolutely love this cover graphic that we came up with this week. So I think it says a lot in and of itself, just in terms of everything that's been going on in the gold and silver market. What I'd like to touch on mostly is just a quick talk about market macro indicators. There's been a shift in regime, and then I want to mostly talk about positions and trades, although I'll hit on what the Fed had to say yesterday briefly. So last week on the 22nd, macro service that I use pivoted from Goldilocks, which, but for a brief stopover in deflation at the end of November, I've been pretty much in a Goldilocks environment the better part of the year since April. So the reflation trade is one where growth is up and inflation is up. And this isn't somebody's projection. This is actually a function of how the market is pricing things right now. Because arguably our inflation picture could be relatively low. From a growth point of view, just some changes I wanted to note to the indicators that I'm working with is high yield credit spreads have continued to come in, most recently at 2.71%. These are really low numbers. We had a confirmation of productivity at 4.9% in terms of, oh, come on, go back. Sorry. We had a productivity confirmation today at 4.9%. And when you look at productivity at 4.9% and wages running 3.8%, we basically have, from a profitability point of view, we have a corporate profitability basically negative cost or a reduction in net labor costs. So it's a productivity number is one to pay attention to. And then GDP now, which had been pricing right around 5.4, 5.4, and then today they came out with a number. I updated this, came in at 4.2, primarily as a function of the trade deficit and inventory changes. So still a very healthy 4.2% projected for Q4, which again is a lagging indicator. On the inflation side, a couple of changes. 5-year break evens rose to 2.5% on the one hand. So that was kind of a negative. 5-year forwards have held pace at 2.2%. So recently, sort of a positive to net neutral in terms of the overall inflation outlook. But CL, and this is priced yesterday, crude oil at 64.4, and I think it was up 2 or 3% today. So basically got this number to be concerned about. I believe Brent was up over 70. So that's something to be concerned about. Trueflation, which these guys put a number out every day. They're tracking January inflation based on their millions of inputs daily at 1.16%, which is way lower than what the Fed is looking at, and Fed making decisions based on November data at this point in time, which makes very little sense to me. So this true inflation number, even if it's not right, it's at least directional in terms of what's happening with inflation. I think we should be aware of that in real time and see if our numbers move in that direction. I'm going to skip over themes altogether. Just touch on monetary policy. This is where we were when we reviewed last week or 2 weeks ago. The Fed was cutting rates. They saw the risk to the downside in employment. And so they cut 25 basis points. And through the whole cycle, they've cut 175 basis points since they started cutting in September of 2024. And now we are on pause. And I think this kind of said it well yesterday at the press release. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. Inflation in November. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. So that's basically where we are. Arguably, this is a tighter liquidity environment, just in terms of the game that the Fed is playing here. So whether the little sell-off in equities today, then recovered into the close, is a function of this or not, or it could be Microsoft earnings, I don't know. But basically, I think we've got sort of a Fed that's sitting on its hands. The only change here, basically T2's been focused on around affordability. I added to this slide from last time Annex Greenland as a way of securing not so much energy, but it's really a function of sort of managing our defense scenario and making sure that the hemisphere and the Golden Dome can be built, I guess. T2 is really focused on affordability. We're coming into midterm elections this year. It's going to be really important in terms of what is done in this space, and keeping oil prices down has certainly been part of that equation. Now, where I'd really like to talk about is positions and trades. We've talked about the portfolio approach as long-only macro ETFs. We trade primarily trend with a mean reversion overlay, and we keep stops relatively tight at 2.5 times daily ATR with a 4-day stop rule. And I think that's comes into play. I'm going to share one example of FXB, which I've been long. It's it basically stopped. I got a stop on a day, and then the next day turned and reversed, and I actually added to my position. So I'm going to talk about that a little bit. When we look at what's been performing year to date, this is updated as of yesterday. EEM has led by a wide margin. I mean, if you look at beta, S&P 500 was up 2%. Year to date, we've got EEM at 11%. Even EFA and IWM massively outperforming the SPY. And gold, of course, was up 25% year to date, silver 64%. These are sustainable rates of change. I'm relatively certain of that. The dollar took a nosedive last week. I talked a little bit about that, changed my positioning around altogether on that trade. And then we've also had this great move in commodities that is manifested certainly in PDBC, which is a composite commodities fund, which I use, but also in USO, which I've got long a week or so ago, and that has paid well. So in terms of changes on positioning, where I am now, the only thing that's changed here is I'm long FX, and particularly long FXA and FXB, which I was last time, but I also got long Friday FXE and the yen. So big moves last week that came on the back of Ministry of Finance actions in Japan seemed to cause a real sell-off in the dollar, and particularly in FXY, but just a big move. And then I'm long commodities, I'm long resource stocks, I'm overweight international equities, and I'm overweight corporates. So just in terms of going through trades, let's see here. I wanted to start with this chart, and I've been long gold for a long time, and I have a couple of portfolios that I don't talk about that have a big weighting to gold, and it's just been something that we had this big move. This is gold volatility. It's a 6-month chart. 6-month daily chart. We had this big move in gold volatility, GVZ, but you can see this on implied vol for GLD, for example, very similar numbers. And we had a big move back in October, and it presaged a pullback in GLD and in gold. Well, this past week we had this big rip higher in GVZ. So we've seen a real, and I posted this chart yesterday, absent this, and said, we're looking at an interim top here. I mean, just when volatility runs like this and we get these parabolic moves, I think Gold was up yesterday 5.5% as the Fed spoke. I mean, those are just things that, to me, if you're long, you want to be taking some profits. You don't want to be, waiting around for this pullback, because we can be looking at 2-3% moves, and we actually had that today. I mean, top to bottom on this. This is GLD on the candle. It opened up, ripped higher after having ripped yesterday, and then really pulled back hard. And arguably, if you follow candles, this is kind of a hanging man pattern. To me, it suggests that if you haven't taken some profits in gold, it wouldn't be a bad idea to do so. So just as, sort of prefacing that, I mean, these are big parabolic moves. I know Vi has a view in terms of where this can go. And I'm not calling for a top, like it's over. I'm just saying this is a top on an interim basis. I said the same on silver last week. I probably was wrong because it put in a little bit of a higher high, but it's sold off today. So we'll see. Let's go back to where we talk about a lot. So starting with the dollar, this is a weekly chart. Last time we were on, we talked about this buy signal that came in. We both Raphael and I talked about this being, hey, it looks like maybe we're going to get a decent move higher in the dollar. And then the Ministry of Finance came out last week and suggested otherwise. There may have been some treasury operations in conjunction with the Ministry of Finance in Japan, and boy, down the dollar went. T2 didn't help it yesterday. He said he didn't think the dollar needed to move. So basically, bless the down move in the dollar. But this is the yearly open. This is where dollar opened this year. We took that out last Friday badly. This gave me on the weekly chart for other FX pairs a signal to go long. And in my own work, I had my stop was hit here. I took 25% of my position off. It was still being off. I took another 25% off, sold some here, and I kept the last 25% that I had open because I'm expecting a bounce on this super oversold sale. It could just go straight down from here, but I'm trying to get out. I'm trying to be cute and get out at a better level. At the same time, I am hedged because I shared this last time. I've been long FXA, which is the Aussie, since early December. Took some profits in this time frame. Just been holding it. And when we last talked, I mentioned that I've just been holding it, sitting on it, and then this thing started going vertical. And so my process when things go vertical and we break out hard on big volume is to take 10% off. So I take 10% of the position off. I took 10% off here, 10% off here, and I took 10% off the other day on the 27th. Yeah, I mean, it's a smaller position, but I still have an open position, and we can take 10% off to infinity and still have an open position. So anyway, that trade now has turned into a real winner, and I have realized some profits on that. Let's see. Also got long back in November, and I believe I shared this last time. FXB, which is the British pound, sold some here into strength. Actually, was stopped out. I mentioned this just a little earlier. I was stopped out back on the 15th, so my stop was hit, and it stayed down for 2 days. So I took off half of my position. But then we had Friday, and Friday suggested to me that I needed to get long on that breakout. And so I added a full position and started taking profits in that yesterday. On the 27th on this big move higher. Again, another parabola in terms of currencies and gold, providing some real opportunities if you're paying attention. We also talked about FXY. So I got long at a pretty good price back in early December on a signal on the weekly chart. I ended up getting stopped out on the 12th, 13th, 14th. We talked about that last time. And then Friday came. I added a full position, captured it right in the middle of this big bar, and took a little bit off, took 10% of my position off. on the 27th on that big move in currencies. So this to me is a position the currency trade is one that's just getting started. I think we have more upside in terms of FX pairs with the dollar. Moving on to commodities. This is one that we talked about as well. This is PDBC, a composite fund. This is a weekly chart. We've been long this quite a long time. We added most recently a position, full position on December 31st, and then this thing starts to go vertical. 10% off here, 10% off here, 10% off here, 10% off here. I mean, basically dwindling down my position, but still have a decent position with the appreciation. Sold some this morning at the open, caught near the high of the day, which I don't often do, but this was something that's just, just an amazing quick run in commodities since the first of the year. I mean, this is just, I think we were up maybe 13% at the top today. GNR is another one, Global Natural Resources. Again, sell some, sell some, sell some, sell some. Just the same thing. I mean, this is kind of a trader's dream in my view. And I'm a position trader, so I take a position and I move around that. I trade around that position. Ideally, it's kind of swinging back and forth, but we're in this sort of parabolic move where it's just take profits or risk losing profits, is my view. DBB, this one we talked about last time. I've been long this since the end of June. It survived the copper tariff middle of July that came through. Added to my position on the 12th of December, sold some into strength, and then had an opportunity to buy some as it pulled back to the middle of the range on the 21st. And then this morning at the open, it was up 5% right at the open. You might have seen copper was up 6% this morning. And so I took 10% of my position off at the open. And of course, it traded down. Like I looked away from my computer from 10 to 10:15, and all of a sudden, gold and metals are, trading down. What's going on? But this is a volatility environment that we're in, and we should expect these wide moves in these assets. Talked about this last time. This is DBA, it's agricultural, built this position, have a full position, been patient with it. I talked to you about it last time. I think we met, we were talking about it being something that maybe I get rid of because it wasn't working. But it's started to work a little bit in the past week. So hanging on to the position, stops are in place. Again, commodities have been showing some real strength into the start of the year. INFL, which is a inflation beneficiaries ETF, it's not so much oil as it is like wood, forestry products. It's got some metals in it. It's got a big mix of equity stock. And I happen to hit this right to get my full position, and it's just given me opportunity after opportunity as it kind of pulls away. I mean, I haven't seen too many lines like this in terms of it. You get this in single stocks, but you don't get this in ETFs. And so, I mean, there's a real opportunity here. I just to realize some profits if you're fortunate enough to have gotten long. XLE, similar situation, built that position in mid-December, early January, took a little bit off here. I've been sitting on this. My price target on this, initial price target was 54. What did we get to today? We got to 51, 52. I still think we've got some legs here because we've got CL working for us now. GDX, again, this is one where I was able to take a little bit of profits. This is actually getting to be a small position for me now. USO, I had a weekly signal on this. USO is an oil proxy. Had some weekly signals on this. I was patient. I got long here. I think I sent Raphael a note, said, hey, I'm getting long USO as a play on oil. Got a full position on these 2 days. And then the thing just turned and ripped on me. So was able to sell some on the 27th for a quick profit. And then today it was up and it sold near the open. I think I sold around 950, so close to the top of the day. But again, this is, if you're not taking profits as a trader, I don't know what you're doing. because it's these could keep going parabolically like this, but I would expect reasonably with a 40 vol asset, we're going to be looking at 2%, 3% down days as well as up days. So I just want to reference that. SPY, since we last met, I had taken this position, I think the day that we talked. And then I stopped. My stop got hit on the 20th. I'm sorry, yeah, the 20th. I took off a quarter of my position, and this is a big position for me. But then the thing turned and went the other way. So my four stop rule is if my stops hit, I take a quarter off. And then so long as the price continues to price below my stop, each consecutive day I take it off. But if the stop, if it price trades above the stop, then it's all systems go. So I still have 3/4 of a position. Interesting price action today. Unclear what drove that. Did not hit my stop, so I still have that position on. I don't like the looks of this. I'd be interested to see what Vi and Raphael have to say. But what has been working well is this happens to be developed markets. Added to my core position on the 21st, was able to sell some on the 27th. Again, we talked about this last time, but in dollar terms, when we're dollar investors here, in dollar terms, these foreign markets are working well as the dollar kind of deteriorates in front of our eyes. EEM is another one. I haven't taken any more off on this. I arguably should have taken some off yesterday, didn't, but had taken some off in January. Still have a good position. This may be reversing. I don't know, but we're long. Vols going up. Pay attention. DPL is another one. This is Pacific Rim. Sold some, added some on this little pullback, sold a little bit more. So again, these international stocks are working really well. I'm not going to talk about bonds because I don't want to. So I'm going to pass. I don't know what's going on with bonds. So I'm going to end my presentation here.
Thanks. Yeah, bonds are tricky. I also don't know exactly what to do. What about Bitcoin?
Oh, Bitcoin, yeah, poop.
Okay. Yeah, because
I had a very small position and it's gone.
gone. Yeah, two
Yeah.
weeks ago we were quite bullish on Bitcoin.
Yeah, it was
So
looking good, wasn't it? Hey, but you have to be
it
flexible.
was.
You cannot have your mind cannot be one where you're like fixated on like this thing just goes up because it doesn't, right? So my view is you got to be flexible. You just have to have no opinion in terms of a fundamental position and go with the price of the volatility.
Yeah, exactly. My opinion also changed immediately when it closed below the pivot, and I said,
Yeah,
okay,
right
next.
below the yearly open, right? Yeah,
Yeah, next.
100%.
Okay, next time. Next time.
Next time.
So,
It'll be another time.
yeah. So, Rafael, what's happening? What do you think about the market?
Yeah, to get to your point, Ted, about gold, when you start to see Peter Schiff coming back on TV, you know that maybe a top is coming. So yeah, I'm starting to unload more aggressively on gold. I'm out of silver. I got stopped on Bitcoin, in which actually I was quite bullish. Got long on oil, and yeah, that's pretty much it. Let's go to Stonks first. Okay. So I think it's going to be the theme for Vi as well, but the picture overall for stocks is not interesting for me. So basically, the picture is the same as 2 weeks ago. Volatility looks okay. I mean, on the matrix, it looks basically the same. On the vola indicator, it looks the same. We are not seeing extravagant stuff. Also, what we got, especially on NQ, I guess you guys noticed that we retested the macro level and macro pivot, sorry, and held. And today we actually retested the yearly open, it held. So if you wanted to be tactically long, you could. I would not be shocked. The problem is the tech mess that we talked about 2 weeks ago has not changed. And with the picture drawn by Ted also regarding the dollar, you can see that clearly there's a problem somewhere. So for now, I'm still avoiding being long ES and Q. There were some tactical longs to take, but I'm not interested. Another picture that changed as well since the last show is Europe. So you have discrepancies in the markets in Europe. First of all, DAX and CAC are now below their yearly pivot. It's not good. The volatility actually increased drastically in both. So you can see here, making higher lows, higher highs. Vola is above the trade of volatility. CAC looks the same. Vol looks the same. And if you wanted actually to invest in Europe, the only market that is of interest is the FTSE. FTSE looks great. So far, it's been holding the sellers that other European markets have encountered. So still avoiding equities. Now let's go to the dollar. So on the last show, I think it was in the 14th, maybe the 15th. The 15th, we had a catch-up move on the dollar that was trying to reclaim MFR bullish trend. Volatility looked nice. And so, yeah, we were actually expecting, I was expecting this trend reclaim to hold. Was waiting for confirmation the next week. And what happened was it didn't hold. Volatility started to increase. You had here, you can see the volatility started to make higher highs, higher lows, and then the dollar just went down. So for now, I mean, what I'm seeing is probably some kind of retest, a bounce here, a retest of trend. But what we saw here on the first attempt of the reclaim of trend is not a good signal, especially when you are seeing what you are seeing in the euro is a confirmation of the bullish trend shift on this one. So confirming again that maybe capital is avoiding currently being in dollar and being in the US market. So yeah, not looking good for the dollar. Now let's go to VIX. The picture also hasn't changed in the VIX, in my opinion. I mean, I'm not seeing something that would lead to a crash, something that would lead to continuous move up on the VIX. Volatility of VIX is still quite elevated. Trade is still not above trend. So for now, I would say that the condition that we are seeing in the US equities is more based on uncertainty, not on something fundamental that could lead to a bear market. So yeah, that's my take. Now let's go to the oil. So this one actually looked good. So I have mentioned in the last show, but also on Twitter in the previous weeks before, that we are seeing a shift in volatility, and that maybe CL would finally get back to bullish trend, and this is what we got. So this is the kind of picture that you want to see in a volatility shift. What you get is volatility doing lower highs, lower lows, and finally getting to some kind of floor. And this is when you see the shift happening. So you had an opportunity to buy when this started to happen, when volatility was breaking here, making lower high, lower lows. This was the accumulation part before the rip. And now we are getting some confirmation on the move. And let me show you. But the fact is that we are already hitting some very big targets. Today, CL already hit the second quarterly target. And we are just at the what we are 29th of January. So if you took the long, you should already start to take some profit on this one. Sure, I think it can go higher. We have a yearly target in the 70s, but come on, already second quarterly target in a month. I mean, you should consider taking some profit there. Same thinking for gold. It's pretty insane. We hit first the second quarterly target yesterday, and today we already hit the first yearly target. Again, we are the 29th of January, and we already reached the goal for the whole year. I actually agree also with the signal that Ted was mentioning for volatility. I'm going to try to zoom here. So sure, you get some volatility when you are getting some crazy moves, but sorry, how do you come back? Okay, but here you can see, sorry, maybe I need to move like this here. Here you can see volatility also on gold is starting to skyrocket. The picture is the same for silver. We are starting to see some things that I don't like to see. So number one, volatility is increasing on those two. Number two, we already reached some very significant target. So as far as I'm concerned, the target was reached on silver, and I think we get a big pause for gold. I would not be surprised to see actually a retest, maybe at least maybe the top range of the MFR trend. That would not surprise me at all. Now let's go to this one, this fucker. So Bitcoin. So Bitcoin, I had a long here, which I was quite proud of. I had an ad here because volatility was looking great. And what happened was, first of all, I got stopped on the ad. It was on the 20th of January. And then Bitcoin actually shifted trend. So if you monitor the trend here on MFR, yeah, the switch was the 24th. So first of all, it deteriorated on the 20th, went to neutral, and then confirmed the switch to bearish trend on the 24th. So as far as I was concerned, it was a get out of signal. So Vi mentioned the yearly pivot. That was another confirmation, but yeah, it's not looking great. Ethereum looks also not good. Volatility is increasing, higher highs, higher lows. Not a good signal if you want to see something rip. Now let's go to something I was actually expecting to happen that didn't. So the US 10-year, US 30-year, I was quite convinced that both of them would actually start to go down and bonds would start to go up. This did not happen. I'm quite surprised actually by this. I don't know the reason. Maybe Vi will provide some more data about the reaction for yields. But yeah, I have the mean daily target, mean daily trade here. Trade is already below. It should be normally a signal to say that volatility has no more room down and it should start to go up. It's not happening. So there are two possibilities for that. Number one, it's gonna happen any day now. Number two, we are really entering a bull market for yields, meaning you don't want to hold the bonds in that scenario. This is not what I would expect. Number two, this is not what I would expect. I would expect normally number one, but yeah, I remain open to this. But for now, it's not working. Really not working. So I would expect Trump to be tweeting like a madman if the second scenario starts to confirm. Now the tech mess. So the tech mess hasn't changed. I mean, if you look at Tesla, that actually confirmed bearish trend. So on the 20th as well. Interestingly, the same day Bitcoin starting to break to neutral. So it has confirmed the bearish trend. Volatility is increasing. Another one that looks terrible, Palantir. Volatility is increasing. Broke trend, confirmed, started to crash. Microsoft tried, just got nuked. Volatility is still increasing, still pointing up. Another one, Netflix. Same picture, volatility up. Apple, same volatility up. I mean, there's no picture. Sure, you have the the one and only Google that is working. You have the Meta actually that started to shift, but this is earnings play, so I would not be surprised to see this one actually fall. But the picture still look very bad for tech. And again, I want to reiterate the opinion from 2 weeks ago. When you see this in the darling stocks that everybody wants to own, and do you really want to buy stocks? So to conclude, I would say that the theme currently of the year is commodities. Ted has highlighted that in a good manner. I think this is the right play, but we have already reached many significant levels, targets that were expected to be reached in a few months, but we already reached them in a month. So I would consider, if you are long, to start to take some profit. And yeah, the dollar, monitor this one. I'm actually shocked by the move that we got. I want to know if Vaidotas, maybe you have an opinion on this one. But yeah, I would say remain very cautious in this market.
Thanks, Raphael. Yeah, very interesting. Today I will provide a couple of levels for oil and metals because I think it's important for people to know at least what is the sentiment because now the sentiment can change very quickly. Uh, I will share my screen. Okay. Yeah, but when it comes to metals, actually, I will not be that brave, and I will not call any tops nor bottoms. Doesn't matter what time frame it is, long term, short term. I think that this increase in volatility is not something you should be surprised with, because, of course, when we have these parabolic moves and margins are changing every week, and people are taking profit, others are chasing. So of course it's normal to expect volatility. What happened today was crazy, but if I had to uh, guess, I don't think we are at the top. I think that gold will go to will make another leg higher to 6,000-ish, and silver maybe 128 or so, and then we will see what the new targets are. But now the question is where to buy that. So of course it's a tricky part, but I would not be the one calling, after today, calling, that we reached the top. Now bulls are trapped. I saw things like bulls are trapped. Now everything will crash. Well, we will see spikes like that again for sure, but I don't think that bulls are trapped. I think that these issues globally, when it comes to precious metals, are way deeper than most of the people, especially on X, are thinking. But here we are systematic, and we use the numbers, not narrative. So for gold we have a new level. For new level for gold is 53.01. So $5,301 is a new flattened zone for us, and today it held. We had a crazy move down, but market closed at well, it will close somewhere around 5,400. It settled way lower, but when we had this bull run, but yeah, so new level is 5,300, and based on that, the upside target is somewhere between 5,800 and 6,000. So where would I try to buy if we get a significant dip? I would be willing to buy it somewhere around 4,800. I would increase my position for sure. For now, my play with precious metals, which is mostly silver and gold, is taking profits in front of macro zones and then buying breaks above to add to my positions. But when it comes to silver, I'm not adding at all because of this significant outperformance. I already had plenty of chances to add, but when it comes to gold, I'm adding, and I'm adding. And I tweeted also that my play for the year when it comes to precious metals is not directional. It's more that platinum will outperform gold in 2026. So for now, it looks okay, and I have some ETF positions and futures options positions for these. Platinum is actually pretty tricky because when it comes to options and futures, well, liquidity is not great. Let's say that, but I have some, so we will see how it goes. This is the play. But 5,300 in gold, and we have 113 and 11 in the silver. So 113 and 11 in silver futures is our new flattened zone, and if we break way lower than that, and I always mean when it comes to flattened zones, I always mean two closes below. Then maybe it's time to get out of silver and wait and see what's happening. But overall view is that silver can go to $128 at least, and gold can reach 58 and or 60 5,800 to 6,000 level first. So we will see. But don't to make a mistake and don't start shorting unless you really know what you're doing and maybe you're using some GLD options or something. But definitely define risk, because one thing that I would not do is to short the market outright using one of the available instruments to do that. Now, Uh, 2 weeks ago, I was quite bullish Bitcoin. I believe all of us were, and we were talking about the dollar. What will happen with the dollar? So now I will go to our main tool, which is the correlation matrix, and I want you to see that SPY and UUP is a positive correlation in multiple time frames. We have a 21-day correlation of 0.22. 10-day correlation is basically the same. 10-day correlation is basically the same. So again, now we have this issue that with this strong weakness in the dollar, so with this weakness in the dollar, stocks will continue to struggle, especially if, of course, that weakness continues. But one of the reasons why it is hard for dollar to reach the floor, so some support is of course because of the capital flow. So my thinking about the dollar is that we need to see some signs globally that the capital wants to stay in the U.S. Financial markets, because for now what we're seeing, both with precious metals and assets globally, not necessarily stocks, but Ted mentioned FX, especially currently. I'm not in FX for also for a reason that my main currency is not US dollar anyway, so technically I am, but I don't have any ETFs or forex trades or something like that. But we see now that foreign capital is not willing to buy U.S. Assets, especially fixed income. Some European and Asian funds are selling. We saw these headlines, rumors. I don't think that it's something we need to worry about, but monitoring capital flows, especially what precious metals are doing in China, what metals are doing in LME, and underperformance or outperformance of gold, for example, in different currencies, which you can do on TradingView or on any platform, which is very important to see how gold is trading in euro, how gold is trading in yuan in comparison to US dollar, and so on. So we need to see this capital outflow stop, and for now it's hard to expect that. We will see. Of course, Trump will announce new Fed chair. Market is not buying that. Of course, I am not sure if Trump understands that when it comes to mortgage rates, and that these are actually going up or down, not because Federal Reserve is cutting or raising rates, but yeah, maybe he will see that. But for me, it's very hard to be in the US when it comes to financial markets. Now, I fully agree with Raphael, for example, that at these levels, buying equities. And actually, it makes sense. Equities are doing nothing. I saw a guy on Twitter had a question about when to get out. So we held today. He has held 69.02. Everyone who is watching trading plan videos and these market talks know that for this year, for me, the most important level in the ES is 69.02 and 25,478 in Nasdaq. So if we go to ES, you will see that today we held. Today we held that, and market closed significantly higher. So technically, is there a reason for us to close all of our positions, panic, and become flat and not have any equity exposure at all? I don't think so. You can have that exposure, but definitely we have absolutely no reasons to be adding to equities, indexes, and I think individual stocks also. Today I was looking at, I was watching Microsoft, and I will talk about Microsoft. I will not talk about Meta, because Meta was not a short. Doesn't matter what X was talking. Meta was not a short since maybe October or November, when it closed above previous year's open. So we had this period when in the end of the year, when Meta became bullish for a year, I said, okay, whatever, I don't like it, I'm not buying, but it's not a short. Now also, of course, we have this gap. I fully agree with Raphael that it was earnings play, and we don't need to talk about that. But when it comes to Microsoft, actually, we had bears and bulls had great levels and great opportunities to do something, to do whatever they want. So of course, bears could short this correction up to the yearly open, and now bulls can see that we are at the quarterly target. So today I feel quite good saying that if for one reason or another you like Microsoft, you can buy a little bit. Personally, I don't like this LLM bubble. I don't like them burning money and investing even more in OpenAI. But this is not the topic for today. Doesn't matter what. I think that for those who are bullish Microsoft, you can initiate a very small position here, and maybe you will have a nice trade which can last for years if bull market continues. Which, of course, when it comes to individual equities and these levels and pivots and everything, you still need to have a reason to buy a stock. it's not an index. So of course, if you want to buy a stock at a target, you need to have some sort of reason. Uh, like Roaring Kitty would say, you must like the stock. So oil was amazing. Oil was really amazing, and we have new level. I promised, because video will come out next week, and oil is 60 and 34 cents. So $60 34 cents is our new level, and basically we had this big candle which of course closed significantly above that level. This level was generated a couple of years ago, a couple of days ago. When I saw that, it was a sign that oil is bullish, and where it can go now. Oil is moving in $3.70 ladders. So we are now above the first ladder, which is $64.10. And the next target up is close to 67 and a half, $68. So if you are long oil and want to scale out of your positions and take some profits, if you see oil trading above $67, you should definitely close your part of your position for sure, and of course keep your stops at a break even. It was a nice trade. It can continue, but I'm not calling oil in above 70 or 75 or something, one level at a time. So for now, I'm eyeing. We closed above 65, which is also a significant number, but the main macro zone currently is closer to $68. So this is that. When it comes to bonds, because I was thinking, am I wrong or not? Because when it comes to Bitcoin, it was obvious that not this time. But bonds, even though we had this move down, I will go to ZB first, because this one is more interesting for me. But after our market talk 2 weeks ago, we had this moved down, but when it came back, and 10-year and 30-year reached its yields. I mean, yields reached its upside targets, and bonds themselves reached their downside targets. I will show soon. But so and when especially when 10-year yield reached its upside target, bonds reversed. We had this move up, and now basically we are trading at almost the same prices like 2 weeks ago. So I don't know. Now when I read and study macro, and what politicians are talking, and what's going on globally, and especially capital flows, which is the most important tool in my process. I don't know. I'm not the one who is willing to short bonds. I still want to see a bullish move this year, especially first half of 2026. But well, market is not doing anything. We are not seeing any significant trending moves. Hurst exponents are low. If you check my fractal range website, we don't see any trades. So I don't know. This one is not clear, and yeah, Ted also mentioned this one is not clear, because with Bitcoin it's clear. I mean, it looked good, now it doesn't look good, and bonds, it looked like maybe something bullish will happen, but now we need to wait. It's hard to predict. We have levels of 115 and 28 30 seconds in 30-year bond. Of course, now we are below, but market closed above it multiple times, and it always ended up with a reversal. So not now, but what I wanted to show that it's very important to monitor targets on yields, and of course it's a reverse. So when you see things like that 10-year yield is at the target, you can be basically sure that bond is at its or note in this case is at its downside target, because they are in reverse. So you can time bonds pretty well using these targets, especially when we are in this mean reverting environment and when the market is struggling to find trends. But from the process perspective, like Rafael also said, a lot of the things remain the same as 2 weeks ago. I have no business in buying stocks. The only stock market which is still makes sense to at least try to buy with tight risk as always, and at the targets or macro levels is Nikkei. People know that I like Nikkei, and we have quite a lot of volatility there, but it looks decent. But of course, we need to be very good risk managers with that market. But yeah, U.S. equities, I don't know. To answer Raghav's question, well, we are not falling significantly. We are above yearly open. Our most important level for this cycle, so for March expiration cycle, is 67.95. But just because we are above it doesn't mean that now we need to be adding. There is no reason to be adding. Maybe above 7,000, I would say above all-time high. So we can use current all-time high as our place where we would be trying to maybe add some to our positions. But at least for now, it's a nothing burger. We have 69.83, the level that we were talking about since September, and market is churning that level over and over. And I would not be surprised that when we reach it, let's say tomorrow or tonight, what the ES is doing. Yeah, actually, we just reached and closed just just above. I would not be surprised to see that maybe market will continue to turn around. But I would be interested in this market, or at least to see what it's doing if we make new highs. But for now, keep your existing positions. If you feel like your positions are too big for your risk or overall view, of course, take some profit. But one thing that I don't see any reason to do is to add to equities. Dollar, I will not even talk about the dollar index itself. It's bearish. We are below all the important levels. Now we have levels below using our equidistant swings from the Excel spreadsheet, but I am monitoring Japanese yen, and I missed this short. Well, not that missed. I expected USD JPY to go higher, so I was not willing to short it at the levels where we had this reversal. But we will see if the market if USD JPY comes back somehow. It's hard to expect that, but we will see. So the reversal area and makes new high, then I will see what the new measurements are. But yeah, not a lot of changes apart from gold and bonds, that lack of confidence in bonds. Everything remains the same. I still think that in 2026 we will have increased volatility not only in precious metals, but as I was saying for months, in equities also. I'm sure we will get sharp moves down. At the same time, we can easily expect sharp bounces up also. But for me, it's hard to expect, for example, our annual target 8,000 before a significant move down, and significant move down can be all the way to 6,000 or so, let's say 5,900. So we will see. Now I think that whatever will happen in the markets, we will be in this range. Let's say couple 100 point range up and down, or we will get a sharp correction and then we will use our targets to buy the dips. But for now, I'm not interested in equities at all. Yeah, so I hope it was helpful. That's it for today.
Yeah, guys, there are no questions. No questions. So maybe we can wrap it up. We've done 1 hour. It's our shortest market talk ever.
Yeah. Yeah, so thanks everyone for joining. As always, if you have any questions, feel free to send us an email or leave a comment or on X. Thanks, Ted. Thanks, Raphael. Thanks everyone for watching and manage risk. And see you in 2 weeks. Bye.
See you in 2 weeks. Bye bye, guys.